So we have a dynamic individual that's going to be talking today. For one, this is our first meeting of the year. Special with me being the new president for the organization. I see faces that I haven't seen since last year, so it is good to see in people. Seriously, very, very much. But unfortunately, I do not know how to turn that little button off. If anyone has any tips on that little bell,
I just sent the instructions to you, but I know you're talking, and so when you get an opportunity.
Oh, okay. Oh, that is interesting. Okay, well, I'll find time to turn it off, and I'll read the instructions. But let's get it. Let's get going. I want to go ahead and really get it kicked off with our opening prayer. We have an opening prayer by way of Mr. Robert Lewis, who is the broker of Inc. Realty Group in Dallas, Texas. So, Robert, go ahead and pray us in, sir.
Sure enough. Dear Heavenly Father, we thank you for this day. We thank you for your grace. We thank you for your mercy. We thank you for allowing everybody to be here, jump on, able to participate. We ask that you bless us, bless our minds, bless our hearts, bless those that are presenting so that they can, give us some knowledge, give us some tools, some tricks that we can use to, as we say, democracy in housing and push that same narrative. I ask that you bless our hearts, bless our minds, allow us to accept the information and not only accept it, but go out and implement it. And those things I ask in Jesus' name, amen.
Thank you, Pastor Robert. I appreciate that. That was great. Next, we have our welcome by First Vice President Brenda Williams, who is right there with her lovely face on screen. Brenda, greet these wonderful individuals, please.
Happy Friday, everyone. Welcome to NAREB's first meeting of 2022. We are glad to have everyone. In today's meeting, we are chock full of great information from our Bancorp South Mortgage, from our smart accountant. We got a real estate update as always, and then health and wellness tips. So buckle your seats, stay ready, and get ready for 2022. Thank you.
Awesome. Thank you, guys. Thank you, Brenda, for that. So let's do it. Let's dive on in. As you see, I'll talk a little bit about what I'm wearing here. I think Sheila has a little bit about on her shirt. So we'll talk about what we have going on for Black History Month a little bit later. But Robert got his on. I see. So we'll talk a little bit about that, but let's go on. We got some excitement. There may be some questions and answers that's going to be forthcoming. So we do have Mr. Kip Dixon with Bancorp South. He is going to be giving us an update on what they are doing over at Bancorp South. They just recently bought out a company, and I'm not sure where they headquartered, but they are moving up in terms of what they're going to be offering, what they currently have on the table. So I'm excited to get Mr. Kip Dixon with Bancorp South the floor to talk about what he has going on for him and his business. And you're on mute, Mr. Kip Dixon. And you do have co-host access for sharing as well.
Now I'm unmuted. Can you hear me?
Yes.
Yeah, that's dangerous now. Hello, everyone, and welcome to 2022. I'm excited to be here. Stephen and I go way back. It's been great to see him on his journey of growth and leadership. And this organization is so fortunate to have him as a leader. He will do great things, and because I've seen him grow up and do great things. It's been 19 years now, Stephen, and it's just full circle. So keep up the great work. And I am going to try to share my screen. So Stephen,
use the share button at the bottom of.
Yeah, let's do this.
Mhm.
Let me know if you're able to see it.
Yes, I can see it.
Oh, sweet.
Yes, we can see it.
You can see it, okay. All right, so first of all, I'm Kip Dixon. I'm the Assistant Vice President of Community Development for Bancorp South, which is now a division of Cadence Bank that hasn't been officially rolled out with regards to our new, the name and everything like that, but we will be Cadence Bank. So that's coming up soon and making it official. So there is a chat box to your right if you have any questions, but if need be, feel free. You can always email me at kip.dixon@bxs.com if you have any questions regarding what we will speak to today. And you keep saying right at home, that is our bellwether product. That product is one that we offer because we're trying to offer as much access to mortgage credit for a low to moderate income borrowers with expanded eligibility to our low to moderate income communities. Depending on the county, and I will go through all of that within the presentation. I know I have 5 to 10 minutes, but I'm gonna try to get to as much as I can. It's a lot of slides, and I've presented these slides to Stephen so that he will have them if he would like to share with you all. But it's some really good information in here. So I'm gonna speak to the first, our right at home product. It is 100% max loan to value, meaning no mortgage insurance and no money down. So we have that option, and especially for those that are in low to moderate income tracks, people get they feel like that if they make 200,000, they can't qualify for such a product. Well, depending on the track, the census track, you can qualify for this product. You have a low interest rate and no PMI and no down payment. And so we will, as we go through this, you'll be able to see where all that comes into play. We do look at the 80% of the average median income of any track. So if the house does not qualify as a low to moderate income track area, we will look at your income. With this product, there are reduced fees, $500 reduction in the Bancorp South administration fee. And then one thing that I love to do is layer. So there's flexible sources for down payment and closing costs. So some of the programs we use are like FHLB, Federal Hand Loan Bank. If the borrower meets those qualifications, we can use that for down payment. And many people in the Dallas upcap cities have been able to use this as well with regards to using upcap as part of their closing costs. So again, we try to look at every possible avenue to get someone in a home, but the least amount of money out of their pocket. And so when they're getting the house, they're not house poor, they're not feeling like, well, wow, I'm in this house, now what do I do? And so that's what we mean by flexible sources for down payment and closing costs. So up to $647,200 in the conforming limits and loan amounts, which is pretty awesome, especially with the market the way it is, specifically in Austin, Dallas, Houston, Atlanta, Tampa, and Nashville, where all others are up to $425,000. So the maximum debt to income for this program is 40% with the 640 credit score, 45% with the 680 credit score. And maximum DTI can go to 43% with the borrower having 3 or more of the following compensating factors. We look at their employment stability, more than 3 years, how strong their credit scores are, and if they have any reserves. And when I look at reserves, I try to look at not only what they have. Trick I use is what they have in their 401k. If they have money in a mutual fund or anything like that. So those are the ways we look at reserves, and also absence of payment shock. So if someone is not renting, but go to a $3,000 payment, then we're going to have to write a letter of explanation as to why that is the case. But in this market, it's a lot of payment shock. So it's just part of a new reality. And one of the keys is no derogatory credit in the last 24 months. And so with that, we're looking at, in case we have to do a non-traditional credit, that also, because a lot of us are taught to use cash to pay for things. I'm for one, that's how I was raised. I'm an East Texas boy, and not far from where Steve and I went to college. But those are the things, that's just what I was taught. And so I didn't learn that, having some kind of credit, as an adult is actually not a bad thing. So because I was raised, if you don't have the money to pay for it, you don't buy it, and it better be in your pocket. And so a lot of people are raised in similar ways. So we have non-traditional credit as a product way we can get someone into a home. So I know that there's a conception that, I have to have a credit score of a 690 or 800 to be able to buy a house. That's not the case. And so the maximum DTI can go up to 45% though, with 5% down payment from the borrower's own funds. So we can't use a gift or DPA allowed for that case. But again, we're trying to help people get into a home and look at every option that's available. So some of the properties we use, they must be single family residence or 1 or 2 units or a condo. So this is key right here. I had a client recently that Monday, and we knew that they were doing that based off of the way we set it up, and they were closing on a new home on Friday. So they had to be off the title and deed in order to qualify for this product. And so we worked it out, the agents and I, to make sure that they closed on that one before we could get into this new one. And so we will, like I said, we do everything in our power to make sure and help someone get into a house using this portfolio product, which is on our books, and we don't sell it. So they will be making a payment to Cadence Bank, Bancorp South, for the duration of the loan. It will never be sold. And I know that's important to a lot of people as well. One thing that I do want to say, even if you have unimproved a lot or land and mobile homes, if it's not taxable and titled as real property, then you're not considered as owning another residential property at the time of close. We do go 30 years fixed rate. Home buyer education and counseling is required. This is key as well. Maximum 6% of seller contribution for closing costs and prepaid. Again, we look at every way we can to help someone get into a home using this product. And non-warrantable condos are available as well. And I'm getting there, Stephen. I know you want to get to the, and we're about to hit that part about the, you'll say. So we can use it for purchase or refinance rate, term up to 100% loan to value, refinance cash out up to 89.9% loan to value. The maximum cash out we can use this product for is for $50,000. The maximum combined loan to value is up to 105% when using Bancorp South approved down payment assistance program that meets requirements for Fannie Mae Community Seconds. So use a lot of TSHAC, TDHCA, SAP programs that we have opportunities to use. So this is one of the new things that we just started with this product. We have a repair escrow. So maximum of 100% loan to value. So your purchase price plus cost of repairs cannot exceed the appraised value. Cosmetic repairs only. So the maximum amount is the lesser of 15,000 or 10% of appraised value. Work has to be done by a qualified vendor, contractor, or tradesperson. This is pretty important because we've noticed that a lot of people in this market have not been able to, move. Prices are the way they are. And so we have this product. So let's just say, well, you know what, guys, let's just stay here and let's make some upgrades to our property. So we can use this product and they can get up to $15,000 or 10%, or the lesser of the 10% of the appraised value towards that work that needs to be done. They may want to upgrade their bathrooms, upgrade their kitchens, which is the main thing that I'm seeing a lot of. And we can use this product to do all that. And it was 10,000, we raised it to 15,000 for 2022, and just seeing what we can do to help more people. And so manual underwriting is available. Fannie Mae Home Ready guidelines, minimum borrower's contribution from own funds at 500. So we already know that's going to take care of itself when you put the earnest money down. And remaining funds can be a gift from a family, a relative, and grants. Again, minimum credit history, minimum 24-month history, no less than. Now, this is one that I have to explain to a lot of clients. Non-occupying co-borrowers are not allowed. So someone's parent may want to be a non-occupying co-borrower for someone who's trying to purchase a home. And this product, we're not allowed to use it. So I push them to some of our other products that are. And so getting to what Stephen really wanted me to talk about, and then I'm going to, after this, Stephen, this section, I'm gonna cut it off and answer any questions because I know I have 5 to 10 minutes, but I wanted to get to this portion most importantly. So on the right at home construction and renovation perm. So as we all know, there's challenges in the low to moderate income market. Housing and finances challenges are facing our borrowers daily. So, but with the low housing supply, this issue affects most markets, but in low to moderate income areas, the supply is extremely low because we have a lot of investors that are purchasing and fixing up homes and selling them and doing what they can do. So with the competitive market for available housing, with cash buyers, investors, the bidding wars, non-low to moderate borrowers, et cetera, they're pushing our low to moderate borrowers further out of the market, which is distressing for me because those are the clients who I want to work with. So housing affordability, as home prices continue to rise, housing is becoming less affordable. Again, I don't need to tell you this audience, because you all know this. So with the condition of livable housing, the average age of housing in the US is 40 years. Many homes located in LMI tract, typically older homes are in need of deferred maintenance, health and safety updates. So one of the big deals now is energy and for all acceptable livable conditions. So with limited financing for new build and renovation, not many lenders are even offered to spill or renovate directly to consumers in low to moderate income areas. We are. So how can we to overcome these challenges? So the products that we have are the construction of perm, which is a single closed loan that provides the financing of a new home. And once that construction is complete, we can convert that loan over to a permanent mortgage. Now, renovation, which is a single closed loan as well, that provides the consumer financing to purchase or refinance an existing home and roll in the renovation costs. Once renovation is complete, then that loan will convert to a permanent mortgage. That's key because that's what I'm seeing a lot of our clients are doing these days. And so with maximum LTV of 89.9% and minimum credit scores of 680, those are key items that we want to remember about the credit score and the maximum LTV. So what can a borrower do with the construction of perm? They can build a home on an unimproved lot of land. They can tear down an existing home and rebuild a new home. They can also include other site improvements, such as adding a pool, a boat dock, barn, accessory dwelling unit, and even more. And so they can include the lot purchase or lot loan payoff, and finance the closing costs using part of the equity from the lot. That's something that a lot of people don't realize you can do as well for the construction of perm. So on the renovation of perm, what can a borrower do is I spoke to this earlier, they can do some general remodeling and home improvement, modernize the home. They can add some energy efficiency updates, solar, windows, HVAC, technology updates. They may want to make it a smart home with video and audio and Siri and whatever they want to do when they walk in and say, hey, turn the lights on. They can expand their living space with room addition or attic or basement build out. And they can create outdoor living spaces. That's what I'm seeing a lot of people doing, especially with the pandemic. A lot of people wanted to have more outdoor space, living space, so they can get fresh air. And this can be done through complete deferred maintenance. And but we also want to maintain, in some cases, a lot of these homes are in historical areas. So we have to maintain the historical preservation. So any renovation product of 25,000 plus. So, and we have all other types of loans. We do everything in our power to find a loan to help clients, whether it's conventional, jumbo, rural housing, VA, FHA. Again, we have several types of loans. I just spoke to the construction of perm. Something new that we just created is our early professionals, which is a portfolio loan, which again, we can get up to 100% loan to value up to $750,000. There's no mortgage insurance. This is great for our engineers, architects, pharmacists, PhD level, optometrists, ophthalmologists, nurse anesthetists, attorneys, CPAs, veterans, nurse practitioners. Guys, this is key. We literally just announced this product with the merger with Cadence, and we've already seen so many people jump on it. And it's for our primary residents when they purchase, not a second home or anything. And then we have our great medical professional program, which is all 100% loan value. And the rates are very competitive as well, if not the best. So we do investment loans and professional loans available as well. So I spoke to some of the down payment assistance programs. We know a good bit of them, T-SHAC, TDHCA, SEF Gold Star, City of Grand Prairie, Dallas UpCap, DHAP, and Federal Home Land Bank. And so I just wanted to go over that real quick and then just show some co-branded type flyers that we can do. We have options to do, like for this Right at Home program. I can do a co-branded flyer like I did here with one of my realtors. And I did this for one of her homes that she needed a flyer for, to compare the VA conventional as well as FHA, just showing the differences, the Right at Home conventional and FHA. And then one great program we have is Community Heroes. This is something where we take care of the appraisal. We give up to $500 in savings at closing. And if they're in a low to moderate, $500. And so, Stephen, I think before I was going to stop, this is in the past, well, the comparisons. And I'll just stop right there because I think I've gone over I'm right at 9 minutes.
Yeah, we have just some couple questions. Thanks, Kip. I compare all the information that you have to what we in our industry have a CMA. Once you get to that analysis page, it's just a lot of information that the consumer can certainly evaluate on their own time. But we do got some questions in here. Robert Lewis mentioned, or is there any overlays for those programs that you offer?
Nope, they took away all of our overlays. So as we're definitely gonna go based off of our AUS findings, or if it's the manual underwrite.
Great, that's excellent. Do the Pam Cottrell asks, do the refis have to be in certain census tract too, or is that for
Nope.
anywhere in the DFW?
It can be anywhere in DFW, but if it's not in the census tract, it has to be based off of their income. And 80% of the area median income if they fall at or below that amount.
Okay, just to clarify, so if they are in the census tract area that's geared towards the program, the income is not a factor.
Not a factor at all.
Okay. Sheila Lucas asks, can you speak on any commercial financing, or do you have any programs for that or products for that? I would ask.
We do. I have a teammate that handles that, and you really don't want me speaking to it because I will jack it up. So I'll refer that to one of my partners on my team.
Duly noted. And Kip, while you are available, can you put your information in the chat, please? That'll be
yes,
most helpful.
I'll definitely do that.
Oh, and by the way, Kip, when I mentioned to you earlier that Robert asked about any overlays, can you explain what overlays are? Because I know that may come up with other lending professionals.
Yeah. So when it comes to overlays, each lender has certain type of guidance that they follow. And so they may have a certain overlay for a particular type of product, or with regards to what they will take away and approve. And they may take, depending on, let's just say, try to give an example. A borrower may just be moving here from California somewhere, and they've been on their job for 2 years, and they're transferring with their job, but maybe in a different role or what have you. In some cases, there may be an overlay with regards to, how to go about, to change the guidance to make sure that they can be approved. But we got rid of our overlays with this merger with Cadence, because we wanted to simplify and just say, hey, this is the way it's, we take it off underwriting system, whether it's for LPA or desktop underwriting. And so I think it levels the field when it comes to helping those. Now, in some cases where we have to go up to executives to sign off, especially on a manual underwrite, I wouldn't call it an overlay, but we look at each person individual and their situation as an individual person. Again, we do everything in our power to make sure we approve loans and not tell personnel. So it's and everything in our power.
It was cutting out at the end, but I think I heard you. So Kip, man, we greatly appreciate the information, and in particular, I mentioned to Kip about the construction perm process and the renovation process. The market is becoming, saturated with investor heavy. Certainly tapping into that price, that affordable price point, that under 250, that marketplace. And so, given certain programs that they offer, whether someone owns a lot outright, or whether you're looking at lots to purchase in the market, you can certainly take advantage of a program that Kip Dixon offers by just only owning the lot, and then having that buyer go and get their financing for the construction perm, which you don't have to then take out another loan for the construction loan. The buyer can do that by going through their lender. And if that particular seller of that lot willing to give you a X amount of time frame. Kip, are you guys able to, let's just say this, if you have everything needed to close that construction perm, how long would a process take from lot acquisition to closing? I just want to make sure I know that.
It just really, we've seen it go up to a year. I mean, it just really depends on the project itself. And with the shortages, with what's going on with our system of getting materials and things like that, we've been seeing several delays. And so again,
on the construction side, though, so it can take a year up to build, but in terms of getting the funding for your first draw,
up to 30 days, if that.
Gotcha.
Yeah, up to 30 days.
Perfect.
Yeah, because it's a one-time close.
Gotcha. Perfect. Well, thank you, Kip. Kip left this information here, guys, and I do have access to the information that I'd be happy to share. We always say membership does have its privileges, so we'd be happy to get that information, out and have Kip here. So thank you, Kip. We appreciate it.
Thank you, brother, and I'm proud of you.
Thank you, sir. So next up, we have the smart accountant, Chrystal Bernard. She is a CPA in the local DFW market. She is running a successful business, and she actually is my CPA that helped me create an opportunity to build this duplex that I did, which we're going to be closing next week on. So I want to get her in the process to be able to talk about her, what she offers, sort of how she, can create a savvy situation and turn you into a killer individual when you're looking at your wealth position. So, Chrystal, you do have the floor. Thank you for joining us.
Absolutely. Thank you for having me today. Good morning, everyone. I'm super excited. I do this often. I'm always really excited to work with real estate professionals because that's something that I tap into as well. And just understanding that generational wealth really does start in real estate. So I am going to share my screen. And so this is Tax Prep 101. So this is perfect timing because we're all going into tax season. FYI, e-filing opens on Monday, the 24th. And the IRS, because of the pandemic from 2020 and 2021, it is highly encouraged that everyone files as soon as possible just to prevent any additional delays. So a little bit about myself. I'm a certified public accountant in Texas. I've been a CPA for 11 years. I've been in full-time business for 10 years now. I too am a real estate investor. And as I stated, I own my own accounting practice. Primarily, I focus on individuals with small businesses, some people who are transitioning out of W-2 employment into their full practices. So they may have, very little revenue, all the way up to, $15 million plus businesses. So I'm very aware of all of the tax strategies that you can take as far as, being a real estate professional or even just in general. So our agenda for the day, we're going to go quickly because I want to cover as much as possible. So we're going to talk about tracking your income and expenses, common missed deductions, mileage versus actual vehicle expenses, being a sole proprietor versus an LLC, maybe with an Escort Election, as well as some Ppp and Eidl loans. I know a lot of small business owners took advantage of that over the past 2 years, and I do want to explain some of the tax implications surrounding those. So first thing, tracking income and expenses, especially if you are a business owner, or maybe you're involved in some type of flipping of real estate, in some form or fashion. You want to use a business account for all of your transactions. So that means all of your income comes in, as well as all of your expenses go out of the same bank account. Now, this is really important because commingling is where we have like personal and business expenses, and they're all just intertwined. That's a big no-no for the IRS. They don't like to see that. But even for CPAs and your bookkeepers, it's very hard to distinguish, okay, what's personal and what's business. So you can really simplify that process with just having just one bank account, even if it's two bank accounts, but they're solely used just for your business transactions. Accounting software such as QuickBooks Online, there's Xero, there's Wave Accounting, that's a free one. I recommend that just to have something. These softwares are your friend. Now, you have to go in there at least once a week so that you don't end up with all these transactions left at the end of the year. Like some people, if you didn't do anything in 2021 from a bookkeeping perspective, now you kind of have to catch up. So you want to make sure that you're doing that on a regular basis. Now, something else, you want to outsource this bookkeeping function if it's just not your thing. At some point in business, we all get to a point to where you really just have to start outsourcing it. So if accounting and taxes just really aren't your thing, do what's best for you. For example, a lot of my clients, I tell them, you're really great at making money in your industry. Outsource the things that you just don't want to do, or you're really just not that good at. That's why we exist as CPAs, to really help and be a business partner with you so that you can reach your overall goals. All right, number 2, this is a good one. Take a screenshot of it. Commonly missed deductions and credits. All right, so for 2021, this is the first year, meals are going to be 100% deductible. Previously, they've always been capped at 50%. So any type of business meal that you take, whether you're eating with, maybe a client, or maybe you did like a big Christmas party with, your circle of influence individuals, you can deduct those 100%. But what I need you to do is you're going to take that receipt that you get, and on the back, just write down what was the purpose of the event. We were talking about, the market. The market is hot, great. Put who attended the meeting. And this is really just for documentation for audit purposes, but it's a big one. All right, number 2, mileage. We're going to talk more about mileage on the next slide, but mileage is a big one, especially for real estate professionals, because you are driving all the time. You're showing property, you're going to go scope out some properties, maybe look at some land. So it is super important for you to be documenting your miles. Now, there are all kinds of apps. There's Trip Log, Mile IQ. As long as you're tracking them in some form or fashion. I still have people that just do it on pen and paper and they keep it in their glove box, which is totally fine. As long as you're tracking them and they're business related, it's a win-win. So mileage is going to get you, this year the rate is 58 cents per mile. So if you think about it, okay, if I drove 10,000 miles last year, that's at least a $5,000 deduction. So it's huge, but you got to make sure that it's documented. All right, number 3. Renting your home for less than 15 days. So this is a huge one. Now, this is only going to be available if you are an S or C Corp. We'll talk about that too. You can rent out your home. So let's say, for example, that you invited some people over, you guys did like a lunch and learn. Essentially, you can have a rental agreement between yourself personally and your business. And as long as you charge your business something reasonable, okay, so how much would it cost you to go and have a meeting space somewhere else? So let's say it was $1,000. I'm just throwing that out there. Then the business can deduct $1,000 on the business side, but you don't have to count as income. The IRS says you can rent out your house for 14 days and it's totally tax-free. Now, once you hit that 15th day, now you have to count all of it. But if you just rent your house out for 14 days, essentially, you can maybe have a employee Christmas party at your house. You can have maybe a photo shoot at your house. And as long as it's a reasonable amount that you're charging your business, it's a win-win for you personally and your business because you're lowering your tax bill. All right, 4th one is our gifts and courtesies. This one, it's missed, but a lot of people have it backwards, especially in the real estate world, I have to be honest. So per the IRS, you can only give a $25 gift. I know it's not a lot, but especially in real estate, what I see, especially for, individuals that are agents is, they give their client maybe a Home Depot gift card, or, they're giving them a very large value item. We can only take $25. Yes. So we want to make sure that we are legally using the tax code, but that's why we have all these other areas where we can really take advantage. All right. The last one, the work opportunity tax credit. So this is a win-win. This is going to be specifically for Employers who have employees, who hire employees who are either they've been recently released from prison, maybe they're a veteran, they've been on some type of government assistance for at least 6 months. If you hire them and you keep them on for 6 months, you can get up to a $6,000 tax credit. A tax credit versus a deduction. So think of this. A tax credit is literally saying, here's $6,000. I'm giving you this money. Versus a deduction is just lowering your taxable income, but then you still pay the tax on it. So we always like credits versus deductions. So this is huge. So if you have a cousin or you have somebody that you know that was recently released from prison, or maybe someone that was a veteran, if you hire them in your business and at least keep them on payroll for 6 months, you have to do some paperwork, but it's super simple. You can get a credit for up to $6,000. That is huge. All right, next, let's go back to vehicle expenses. All right, so mileage rate for 2021. So this is the mileage that you're going to use when you prepare your taxes here shortly. You're going to get 56 cents per mile plus any use of tolls. So tolls is not in the mileage rate. This 56 cents though is going to encompass your insurance, wear and tear on your vehicle, pretty much anything as far as repairs, maintenance, and so on. So you can't deduct like your auto payment plus take mileage. It doesn't work like that. You can do mileage plus your tolls. Now for 2022, because as we all know, everything's getting expensive, including gas. Now it's 58.5 cents per miles plus tolls. That's your mileage option. You also have the option of actually depreciating your vehicle. Now, if you depreciate your vehicle, okay, let's say you have a $20,000 vehicle, we spread that over 5 years. That means you're going to get a $4,000 deduction every year just by using your vehicle. Now, you can also include tolls, but here's a good one. So we have something called bonus depreciation. If you buy a new vehicle that is greater than 6,000 pounds, so this is going to be limited to like heavy trucks, heavy SUVs, anything that's greater than 6,000 pounds. If you use it 100% for business, you can deduct the full amount of the vehicle in that same year. So I had several clients at the end of the year, they went and bought $50,000, $60,000 vehicles, and it was 100% deductible because they were using it 100% for business, and it lowered their taxes easily. Some people $10,000, some people $15,000. So if you're like, hey, I think I'm kind of in need for a new vehicle, I would highly recommend you getting a heavy SUV. Now, I know some people may say, okay, well, what if I don't use it 100%? Maybe I only use it 50-50, 50% personal, 50% for business. Well, you get the 50%. So if you buy a $60,000 vehicle and you only use it 50% for business, then you can deduct $30,000 on your taxes. So that's how you get a full write-off. It has to be a new vehicle. That's the only provision here. If you say, Chrystal, that sounds great, but I don't want to buy a new vehicle. I don't want to spend $60,000. If you still buy a $6,000 pound vehicle, you can take $25,000 in the first year. So it's still a very, very good depreciation expense from a tax perspective that a lot of people just don't know about. So even Stephen and I, we did some tax planning and we kind of ran some numbers, and I said, hey, I think this might be a really great year for you to buy that vehicle that he's had on his list. And so that's why it's so important to meet with a CPA at least a couple times a year so that you know what your options are, so that you're not just kind of spending money just to be spending it, but that you're doing it more strategically so that it helps you both personally as well as on the tax side. All right, next, sole proprietor versus an LLC with an Escort election. Okay, so pretty much everyone in business kind of starts off as a sole proprietor, right? We're just excited. We go start off in business and we start making money. There is a benefit though. If you are making less than $50,000 for the most part, it's going to be a lot of sense for you to go ahead and track to do your tax reporting on a Schedule C. Once you surpass $50,000, it's going to make a whole lot of sense for you to be taxed as what we call legally you're an LLC, but you have what's called an Escort election. The S-Corp is just an election. You're actually not an S-Corp. You are an LLC, or you could even be a C-Corp, but you have this S-Corp election that you file with the IRS. This is going to be huge, especially for business owners that gross greater than 50,000, because the tax savings are in the self-employment taxes. Hands down, whether you make 100,000 or $2, you're going to pay 15% in self-employment taxes. Now, the IRS says, you know what, let's give these small business owners a break. And they say, as long as you pay yourself a reasonable salary, you only have to pay this 15.3% on the salary, which is your W-2 from the business, versus the entire business profit. So for example, let's say after all of your expenses, you take your mileage, you take all your deductions, and your net profit is $100,000. If you are a sole proprietor, remember your self-employment taxes are 15.3%. When I say self-employment taxes, this is going to be your Medicare and your Social Security. There's no workaround around that. You're going to pay those no matter what. So 15.3% of 100,000 is 15,300. Okay. Now, if we said, you know what, let's go ahead and make you an Escort Election, and we're going to give you a reasonable salary of 50,000, you only pay the 15.3% on the 50,000 versus 100. So instead of paying 15,300 in self-employment taxes, you only pay 76.50. Now, this was just an example, but I have seen individuals save over $10,000 a year just by being an S Corp. That doesn't include any other type of tax planning that we do. There's something called an accountable plan, where we can take a portion of your home, like home office related expenses. That's just in being an S Corp. But this really only works if your net profit is at least 50,000. I know a lot of people have questions on this, so if you have some questions, we can answer those. I just want to be respectful of time. All right, lastly, PPP and EIDL loans. So both PPP and the EIDL loans are non-taxable. Now, for the most part, everyone's PPPs were most likely forgiven. The EIDL loans, however, those are going to be those loans that are now payable over 30 years. Some people are coming up to that point where your payments may start probably within the next 6 months or so. Something to note is that the advances are grants and non-taxable. So if you receive that $10,000 grant, or sometimes it may have been only $1,000 if you only had one employee, that's going to be non-taxable. You do not have to pay that back. You do not have to report it on your taxes. Now, the interest, however, is deductible. So the interest on the EIDL loans are 1% over 30 years. You want to deduct that interest. As soon as you start paying on those, you can deduct those expenses on your taxes, just like any other form of interest, any credit card interest that you have. So please be sure to note, they're non-taxable. You don't directly report the loan that you received, but you do deduct the interest if you are assessed any interest. All right. So Stephen, I know I went pretty quickly, but I wanted to give at least a couple of minutes for question and answer. So if anyone has any questions, you can put them in the chat box.
Well, I do have a question. There's a misconception that when you look to as an election, as a S Corp, you have to set yourself up with a DPS W-2. You have to receive the checks. Can you explain the difference between not having to set yourself up with a payroll company to pay yourself versus paying the payroll tax when it's required?
Right. So essentially, at the end of the day, the IRS just wants to make sure that they're getting a portion of these self-employment taxes, right? So if you want to pay yourself, let's say you're like, okay, it's December, let me just pay myself my reasonable salary now and pay the taxes, then you can absolutely do that. The goal is just to make sure that you have your payroll taxes paid on your reasonable salary by the due date. So some people, they say, you know what, it makes a lot more sense financially for me to break it up monthly. So I have a lot of clients, they say, you know what, let's just take it out a little at a time so that it's not just one big chunk. That's totally fine. Again, this is where you working with your CPA, your bookkeeper is going to be very helpful, because they're going to help you navigate through all of that. If you want to just do it yourself and go through an ADP or Intuit or Paychex to set up your payroll, that's totally fine. The goal is just to make sure that you pay yourself a salary and that those self-employment taxes are paid. That's the biggest thing.
Okay. Good, good. I hear people often, they say, well, they are LLC, but they say, I just pay myself every month, but they don't necessarily pay they haven't set themselves up as an S corp for that payroll, for the payroll purposes. And that, to me, that seems the incorrect way to do it, especially if you're trying to buy a house.
Well, and it really just depends. So going back to the slide, if you are under 50,000, yes, you can do that. You can just transfer from your business account into your personal account, not a problem. You're just going to see more tax savings if you're over 50,000 and you are set up as a W-2 employee. It's a win-win for you. It's a no-brainer. If you're over 50,000, you need to be an S corp. As far as how that looks on the lending side, the same amount of income is going to show, because essentially, instead of you just showing, let me go back to my example, instead of you showing 100,000 in net profit, we're just going to take 50 of that and show it as a W-2. And then the remaining 50 is going to be the profit from the business. So on the tax return, it's still going to show 100,000 total as income. So from a lending perspective, you won't have any issues there. The goal is just, if you're over 50,000, we need to have a conversation so we can lower your tax bill ASAP.
Good, good. Thank you. And there are a couple questions. One, do you do taxes for any homeowners association companies?
I don't do any taxes for HOAs. No,
Okay.
I don't. Typically, HOAs are going to be nonprofits for the most part. And so nonprofits report on what's called a 990, which is more like an informational report. So they're going to follow the same guidelines as an S or C corp. They just have some very small differences that we have to report, but for the most part, it's going to be about the same.
Great. In addition to that, we got some kudos. Pam mentioned she wished she had this 10 years ago. We understand, Pam. As a sole proprietor, Vicky asks, as a sole proprietor, do I need to pay quarterly taxes, or what is the difference for waiting to the end of the year?
The biggest difference is going to be if you have a large balance, and what the IRS calls large is $1,000. If you have $1,000 due on your taxes every single year, then you are assessed a penalty, because the IRS says, hey, we want you essentially just to break even. So if you are not paying quarterly and you have this balance greater than $1,000 every single year, then you get slapped with the penalty. Now, it's not very much, I will say. So it's really a matter of preference. Do you just want to wait and therefore be assessed this extra penalty, or do you want to pay them throughout the year? I would say what I see is most successful is when people will pay actually monthly, because I feel like people can better budget that with their personal expenses and their business expenses, versus on a quarterly basis, it can be a little bit different. In real estate, a strategy that I have with some of my real estate professional clients are, if you know you have a big closing, let's just reserve one big closing for your taxes. So you don't even count that as like income to you personally. We just know, okay, that whole closing is going straight to taxes. So there are just some ways that we can work around it. The goal is, again, no one wants to pay the IRS, whether it's in penalties or in taxes. So how can we best strategize so that we can get everything as low as possible? Oh, I think you're on mute, Stephen.
Sorry, one last one. When should you use Form 1040 with schedules versus 1122s or 1120s?
Yes, so that's here. So a 1040 Schedule C is going to be what a sole proprietor reports their business income and expenses on. An 1120 S or C Corp, most small business owners are not C Corps, because essentially you're going to get taxed twice. The business is going to pay a tax, and then you individually are going to pay the tax from any income you receive from the business. So I'm really just doing this comparison between a sole proprietor and an S Corp. S Corp is an 1120S. If your income after expenses is greater than 50,000, you most likely need to be an S Corp.
Period. Thank you.
Period.
Thank you. So we're going to be bringing Chrystal in, doing a segment next month, just not outside of the monthly meeting. Chrystal, can you share a little bit about that day? So we want to get people that may have more questions. They want to talk about cryptocurrency and such, you know, NFT, you know, all that savviness. So yeah, go ahead and share that.
Absolutely. So this was really just a brief introduction to, okay, what do you need to be doing now? Now, we've had a lot of changes. So this past year, we had a large increase in individuals making a lot of money actually in cryptocurrency. So the IRS has issued just some more, you know, kind of just procedures that we need to go over so that everyone knows what to expect when they get those Robinhood or crypto.com statements. I also want to touch on 1031 exchanges. So that's very big in the real estate market. And that is where if you have an investment property and you're going to sell, you can defer some of the capital gain if you place the majority of those proceeds into the new property. But again, there's lots of deadlines associated with the close of one, the close of one sale to the replenished property that we need to go over, as well as overall just capital gain tax. There's been some changes there. So I think a more detailed discussion is warranted just so that everyone has the information. I feel like once you have the information, you can make the right decisions going forward. Stephen, you're muted.
Can you share that date?
Yes, so that date is going to be February the 11th, Friday, February the 11th, same time, 10 o'clock. I think it'll be probably right at 45 minutes. And I'd love for everyone to get back on just so that, again, you can have the information, you can share it with others, and we'll all be in a better place. So I do want to leave my contact information. So crystalbernardcpa.com is my web address. You can contact me there if you're like, hey, I need to be an S-Corp ASAP. Contact me. I'll make sure that you get all set up. And again, I work primarily with small business clients. However, I do have a referral. If you report on the 1040 and you really just need a little bit more guidance on the individual side, I have a CPA that I can refer you to as well.
Thank you. Thank you. Appreciate it, Chrystal. Awesome. Awesome. I learned even more than what you always teach me in my segment. So I appreciate that. Definitely those that we know that sometimes tax people, they change year over year. You know I used to go through, you know, a couple people every, you know, 2 to 3 years, but I'm glued in with Chrystal and her philosophy and her education opportunities that she's sharing. So please take advantage of that. So thank you, Chrystal. We appreciate your time. Can't wait for February 11th at 10 and look out for the Zoom link on that, guys. We'll be doing some tax 101 Q&A. I believe, what, 45 minutes, right?
Yeah, I think 45 minutes will be perfect. Bring lots of pen and paper so that you have everything that you need.
Perfect. Thank you very much.
Awesome. Bye.
So, man, guys, that was great. We're on the tail end of it. We do want to do want to bring Theda Redwine. She's going to give us a real estate update. As you know, she's been doing this for the last few years, really, with NAREB Dallas. So I want to give her an opportunity to provide real estate update to us, as she always do so eloquently, and we'll go from there. Theda, are you there?
All right, I'm here. Can you hear me?
Yes.
Okay, good. All right, well, good morning, everyone. So there's a couple of things I want to go over with everybody. And one of those issues is I've gone over in detail what a PID is, Property Improvement District. And we talked about where within DFW there are PIDs, which is Property Improvement District. So as a reminder, that is a taxing entity. It's basically a special assessment that is included in your property taxes. Now, there are segments, new subdivisions that not only have a property owners association or homeowners association, but they also have a PID. Now, the difference, this is a reminder because I went in depth previously, is your PID does not allow control of personal properties. So whatever that person's address is, a PID does not involve controlling. They don't determine what you can and can't put in your yard. They don't determine what colors you can paint your house. They don't involve themselves with any of that. As I mentioned previously, when I lived in High Point, there was a PID, and $333 on average was the amount collected per home per year. There was basically 100 homes. So they basically had 300,000 to work with per year. And with that money, they would decorate on Clark Road with beautiful lighting during the holidays. They put up $1 million plastic fence on the roadways that surrounded the community. They paid for additional code enforcement on Saturday mornings, and they paid for additional police patrol. We're now in an era where the new home subdivisions not only have fees that are charged to the homeowners for being a member of a mandatory homeowners association or property owners association, but they also have this PID, the tax assessment. Now, when you're in a PID, the taxes you pay are a tax deduction. Homeowners association, property owners association, those fees are not tax deductible. Now, what we're up against is the amount of fees is really out of control. You need to make sure, if you're working with the client who is looking to purchase in a new home community, you want to make sure there's clarity as to whether or not they're having to pay both homeowners association and PID fees in addition to the taxes. So when your clients are buying a new home, it is not unusual for the lenders, especially if it's the same lender that is the builder, for them to underestimate how much will have to be paid for insurance and taxes. And the reason they do that is it improves their debt ratio. So it makes it a little easier for them to qualify. So you don't want your clients to have sticker shock after the fact. So that's the first issue you need to address yourself with. Lastly, MetroTex has stated that they are working with the Texas Real Estate Commission in order to come up with specific forms to make it very clear to anyone who's purchasing a property in a PID that it is in fact in a PID. We have always had the wording. It's always been in our contract. But the problem has been agents, therefore clients, did not know it was there. So I'll update you guys when there is an additional form to be completed. Our contracts already state that if your seller is in a property improvement district, they are to notify the buyer that it is in fact in a property improvement district. And as I mentioned before, if you go to the, in this case, Dallas County Appraisal District, so whatever county is in, and you look up the property, you should be able to see that that property is in fact in a PID. I'm changing subjects now. Now I'm gonna do, I wanna update you guys on the issue of the iBuyers. And the iBuyers would be like Zillow and Redfin and Open Door. And those are the corporate entities that are purchasing properties and then putting them back on the market. Now, Zillow got out of the market and they were losing money. So they got out of the market and they actually sold the properties at a deep discount and at a loss in many instances. What happened was Open Door and a couple of the other remaining iBuyers thought it was a great opportunity, and they have actually accelerated. In certain areas, such as Louisville, Carrollton area, they're pretty much running the game. Open Door is running the game. Now, the way they function is they look for properties that are between 100 and 600,000. And they're able to sell it to sellers on the premise that their fees are only a total of 5%. What they're not explaining is overall, especially like with Redfin, once they add their other fees, it ends up being closer to 12% for Redfin, closer to 7 to 10% for Open Door. Now, the challenge that I've had here lately has been that while Open Door acquires the property, and their process is that the potential seller completes information online about the property. And if it meets the criteria, and I think it's has to be built after 1930, but if it meets the criteria, then they have someone come out to the property and do an inspection and then make an offer. The challenge that we're having is, as I'm looking at what is on the seller's disclosure, although they will reflect if the previous owner had a warranty on the foundation or they had foundation work, they usually reflect that. But their seller's disclosure is woefully shy of what we know they know. If you're looking at the property and you see it's been renovated, there's a problem with the fact that they're marking unknown in areas where we know that they know. Now, I've got an instance I'm working on now where not only did the, and also with Open Door, they require your buyer to apply for the appraisal, to pay for the appraisal within 3 days of being on contract. Well, obviously, that's before the inspection's done in many instances. So when the inspection is done and you submit saying, these are the problems, in my case, it was like $29,000 worth. And the reason I know the dollar amount is because the client, there is a particular inspection company where for an additional fee, they will give you a quote sheet, and she paid for the quote sheet. So the quote sheet itemized, and admittedly it's high because they don't know what's going to happen when they get in there, but it had major issues associated with the light fixtures. The lights don't come on in every room. They had clogging in the bathtub, which was visible if you just walk past. And the fuse box was literally humming and corroded. Well, they issued a form letter when we issued in the option period, when we issued an amendment, and the form letter says, we don't deal with any cosmetics. Well, as I'm talking to their agent, their definition of cosmetics is anything not reflected on the appraisal. There lies the problem. Because we know, and I've been in the business for over 30 years, and it's been over 20 since I've had an appraisal where they mentioned anything that needs to be repaired. Now, on an FHA appraisal, the appliances have to be working. Well, you know, like I do, the appraisers are literally just walking through, and they don't know what's there. Well, I recognize this, and as I mentioned before in my explanations, if you are representing the seller or the buyer, you need to be there, depending on which side you're on, when the appraiser arrives. Well, generally speaking, the appraiser arrives after your option period, so you already know, so it's not as big a deal. In this instance, the appraiser arrived within 48 hours of being ordered, and neither the loan officer nor myself or the client was informed that they had been dispatched. Not only were they dispatched within 48 hours, they had the appraisal completed in just a few hours. All of that is problematic. It's an FHA loan on top of that, and the fee, and that the property's like $340,000. The fee charge for the appraisal was $600. So now I have a client who's expended money for an inspection, for a quote sheet, and an appraisal, and we have a seller that's saying if it's not on there. Well, needless to say, it was a great appraisal as far as the property comps, but there obviously, this is the problem, there wasn't a single reference to anything that needed to be addressed. So we are in the middle of working with the mortgage company. If you are in a similar situation, if your client wants out and you're out of the option period because you believed them when whoever told you that an FHA inspector would denote that, then what you're going to do is you're going to present your seller with these repairs, which means the property won't pass as regards the property itself. So there are two parts of the approval process: approval of the person and approval of the property. So that is not part of the approval of the person, which has to happen in X amount of days. It's approval of the property, which rolls all the way up till the time of closing. Now, in the event that you don't like that method, if there's an issue with the roof and you cannot seem to come to an agreement, if you notify your insurance agent, he or she'll probably work with you and give you a letter that says the roof does not meet the criteria and therefore this needs to happen. And obviously we want only honesty. This is not to try to make up anything or bamboozle, But when you have those actual instances, the contract specifically states that is approval of the property. So in order to get your mortgage, you have to have insurance. And if insurance is saying, no, you have to do this first, you have to cut those trees over the roof or this, that, or the other. If you're needing to get out because it's just a bad deal, those are options. And that's it. That's all I've got, Stephen.
Thank you. Thank you. Fantastic. I even know even with the PID, there's communities that's, because there's not enough homes being built, they having to go wide into these communities. And so areas all the way into Salina, Aubrey. I mean, it's crazy. So just keep that in mind. I know from a lending perspective, they're going to need that information, so they can include that into debt to income ratio. In some communities though, with the PID, Theda, what I found out last week is the increase of the PID is on the lot. So if it's a 50s lot home, then the PID in some areas, one community is like 2,500. If it's on a 60s lot, that PID goes up to like 3,600. So they are really looking at the PID increase due to the size of that new home lot. So educate the clients, ask questions, very important to do that, talking to the sales consultant. So thank you. Well, guys, we just getting ready to wrap up, but we do have a health and wellness tip. President of the Women's Council, Marti Jeffries, said that she want to, provide some lovely information on, some health and wellness tips. She's a holistic person, and so I said, hey, let's do that. Share with the members, non-members that's here about some tips for health and wellness. So, Marti, you do have the floor.
Thank you, Stephen. So when we talked about this, we talked about maybe putting a section in every month. We know that the CDC is telling us what get vaccinated and what's coming with COVID, but what they're not doing is telling us how to maintain our current health in order to prevent us from COVID. So what I did was, it was actually really hard because there's so many herbs that you can take that'll help boost your immune system. But that's the biggest thing that we see in staying healthy and fighting any disease is keeping your immune system up. So how do we do that? We do it by making sure that we get the proper nutrients and minerals and keeping our body what people call alkaline versus acidic, because when the body is acidic, it's subject to diseases and illnesses. So getting proper nutrients is the food that we eat. So are you eating healthy fruits and vegetables that are providing the vitamin A, the vitamin C, the vitamin D, the vitamin K? Are you taking some type of multi-supplement? Or now I see a lot of products with immunity boosters in them, but there are several herbs that you can take. And those are, I'm just going to talk about 5 because there's several. Some of them you may have heard of and some of them you haven't, but all of the ones that we talk about today are easily accessible through Sprouts or any of your health food stores, or ordering them online. So the first one I want to talk about, which everybody knows about, is Echinacea. Echinacea is a flowering plant native to North America, so it's native to us, that has been used by healing by indigenous people for centuries. So research supports its therapeutic benefits, demonstrate that Echinacea has an anti-inflammatory, we're going to use a lot of anti-words, anti-inflammatory, antimicrobial, and pain relieving properties. It is also one of the top herbs to help support immunity or immune system. So how can I take Echinacea? So you can take it as a pill, but you can also buy the herbs. You can grow the flower, dry the plant, and you can take it as a tea. You can also get a tea already made at your local grocery store that has Echinacea and other benefits in it, so you can drink it as a tea. For those who don't like to take pills. The second one is oregano oil. I use oregano oil. If I ever get the sniffles or feel like I'm starting to come down with something, I take 10 drops of oregano oil and I put it in a bottle of water. I'm not big on plastic, but we see plastic today. I put it in a bottle of water and then I sip on it. If you do not like the taste, you can put the 10 drops into a 1 or 2 ounce glass of water, take it as a shot, and then just chase it with regular water. So it's a common ingredient in dishes. So that's how we know Echinacea, but it also has some therapeutic uses. Its evidence-backed benefits have been antimicrobial, antiviral, antifungal, antioxidants, anti-inflammatory, anti-diabetic. For those who are diabetic, this is something that you should maybe think about taking as a supplement. Not saying don't stop taking your medicine, but definitely take it as a supplement to help reduce your numbers and then hopefully come off of medication. And then it's also cancer suppressing properties. So for best results, it basically says to take it how I said, buy the oil and then take the drops in water. You can also, so the taste is very strong, so that's why it's concentrated and we use the water with it. You have to be careful because it will burn your mouth. And it says here, the esophagus, it could burn the esophagus. So a few drops, water, and you'll be fine. A day or two later, whatever cold you have, it'll clear up. The third herb is peppermint. You can do peppermint in an oil or you can do it in a whole leaf. Peppermint supports the digestive function, which helps fighting off sickness. So it's good for digestion. Enjoy it as a tea, or you can nibble on the raw leaves. I know people who eat the peppermint leaves as to freshen their breath. So where's peppermint? It's in my garden. Right now it's actually in my kitchen. I just moved it over into a small, cute little pot, and I'm able to pull off of it, wash it, and make sure, because of our Texas freeze, that these herbs stay with me during the winter time. The next one is Rubio's tea. I don't know if you guys have ever seen it, but it is in the grocery stores. It is spelled ROOIBOS. And the reason why I wanted to spell it is because it doesn't really look like how it sounds, but you will see it in the tea section. So this tea contains antioxidants, nutrients such as iron, calcium, vitamin D, potassium, copper, manganese, zinc, magnesium, and alpha hydroxy acid. Rubios is used as an effective curative to treat allergies such as hay fever and allergy-related bronchitis. Rubios extract has an anti-aging effect, so it's good for the effects of aging and for overall beauty. It reduces the impact of antioxidant byproducts, which neutral pathways, stimulating concentration and focus. So it also helps with focus. So the extract is rare, has rare nutrients that work to fight free radicals and ones that have bioflavonoids, which work to help improve the blood circulation and thus prevent hemorrhaging and high blood pressure, offering potential cardiovascular benefits. So Rubio's tea, you can get it, or Rubios, you can get it in the dry herbs. You can boil it as a tea. You can get it in the tea bags. The last herb that I want to talk to you about, I actually have two in my home. Aloe Vera. We all know about aloe vera, but a lot of people only know aloe vera as if you get, like some type of scratch and the healing properties of aloe vera, but it also has quite a few other healing properties or benefits. So aloe vera is rich in vitamin B12, B1, B2, B6, A, E, and C. Did y'all know that? So you can actually take aloe vera. You can use it as a topical ointment. It's also the benefits are niacin and folic acid. So you can take it as a vitamin, or you can also use it in juices and smoothies. So what I do is I just take the aloe vera leaf, I cut like a chunk of it off, I open it up in the skin, I rinse it, and I drop it in my smoothies and blend it. It has no taste to it. And then you get all of those great B vitamins. So these are just 5. I do have a list, and I am going to send it to Steven, so that if anybody wants the information that I have here, then he can share it with the members. Did anybody have any questions? Thank you.
Thank you, Marty. I appreciate it. Guys, that was Marty's take on the health and wellness tip side. So we appreciate that. When she mentioned about doing it on a monthly basis, our goal is to also bring in, experts as well, to talk more about that space. So we appreciate Marty kicking this off for the first year. We know that's what you do, Marty. So we appreciate it. So last but not least, guys, we are wrapping up. We do want to make some announcements. We appreciate everyone staying engaged. I think we got up to about 50 members on here. We're down to 50 participants. We are now at 44. So we appreciate that engagement still. But I do want to share some updates. We have some flyers we have going on in the community. One is the Ziegler Agency Winter Coat Drive. So this is it's now through January 29th. He has here the drop-off locations, Services of Hope, which is in Dallas, and then also the Ziegler Agency, which is in Frisco. So donations are going to Street Side Showers, Services of Hope, and Community Lifeline Center. So as you see the times on there for drop off, Chris in particular said that he wants to do, he was looking at the coat drive at the beginning of the year, because we know in Texas, just like last year, we got swarmed with that winter storm, and it was crazy cold. So we are gearing up for that. The season is changing right now. It's cold outside. So that's the level of importance that Chris is and wants to add value for individuals, companies that may not be doing coat drives right now, but now is the time to really collect those coats, especially if you got a new one for Christmas. So another announcement we have here, let's see. So what we are going to do, okay, let me see. So what we're going to do is, I want to show the shirts that we have, the people that we have that have the shirts on. Who can you show your shirts a little bit? There you go. There you go. So Home Equity Matters shirts. So what we're going to be doing for Black History Month, we are going to do a blackout Zoom meeting. So we want everyone to take advantage of the shirts that we have. It does have the logo of NAREB Dallas logo here on the sleeves for representation, but we are going to do a blackout for our meeting in the month of February. In addition to that, what I'm really more excited about is that what we're doing is to continue with the mission statement and the commemoration of Dr. Martin Luther King's birthday. We are, in addition to the shirts that we have, in addition to the shirts that we have for purchase, we are also doing yard signs. So this is an opportunity that we have to flood the streets in the South, up north, east, and west with yard signs. So here's the yard signs that we have in store. So here's the flyer that we're putting together. We're going to be making this live. So basically, for NAREB Dallas welcomes you to Black History Month. Get your t-shirts and the yard signs for the bundle of, this is what the yard sign is going to look like. So let me zoom in a little bit. So it says Black History Month, Home Equity Matters, Democracy and Housing. Then it has the website underneath. but we're getting these printed out. So put your orders in. So for the bundle for the shirt with the yard sign coming, it's $30 for members, and it's for non-members, it is $40. And if you just want individual t-shirts, you see it's $25 for members, $30 for non-members, and then the yard signs as well, $10 for members and $15 for non-members. I do want to mention this, that we do encourage you to reach out to your real estate business, to your support system, your network, and really flood the streets. If you want to put something in front of their yard as a support of Home Equity Matters that you just helped them with, you have that opportunity to do that there. So we really want people to support it. We're taking this all the way to politicians, to civic leaders and citizens in the community, because we want us to focus on on Home Equity Matters, especially in Black History Month. But also, in addition, we know that certain people may live in an HOA or may have a POA. So please review your covenants and restrictions if you're going to be within your HOA, if you're going to be putting it in your yard. I do know certain restrictions may be on a limited basis on timeline, but definitely we ask that you take that into consideration. But either way, we already have commitments for Theda Redwine. She is doing, she's purchasing 5 of these signs here, and she's going to be flooding her network with Black History Month yard signs. So this is what we're doing. We ask that you put your orders in due to lead time. Put your orders in by the 27th of January so that we can have the yard sign by the beginning of the month of February. And then the t-shirts, we want to have that to you within that week of the meeting for the monthly meeting. So again, we are going to be flooding the blackout and then flooding the streets. So look out for the payment. You will be able to go on the NAREBDallas.org to make a donation to contribute for the shirt and the yard sign. So if you have any questions, give me a call directly. I'm happy to answer anything. So we do see the people that have it on here, but we're going to everybody's going to have this. My goal is for everyone to have this for Black History Month. And we do have a representative for NAR that's going to be that we're looking to bring on for our Black History monthly meeting in February. So we want to be able to show them what we're doing out here on the local boots on the ground level when you look at NAR. So whether they put it in a publication or not, we just want to be able to showcase them that we act in unison together, and we're promoting home ownership, because we know that the value is Home Equity Matters. So look out for the flyer. That'll get sent out over the weekend. It gets sent out over the weekend. We may even have something this evening for you to go out, distribute to the email. But for those that are not a member of the organization right now, we strongly encourage you to get connected and become a member of the organization. We ended the year last year with about 61 members. This year, we know that we offer renewal. So we're at close to 30, but we want to increase that number, guys, so you can continue to we can continue to add value to each other and take advantage of everything that NAREB is going to be putting out in the community for this year, which is exciting about, which I'm really excited about. But overall, get connected, become a member. It's bigger than us. And being that I'm coming in I'm in here as the president, I'm even more excited and thrilled to partner with each and every one of you and promote your efforts. In addition to that, we are starting out with newsletters. So we are committing to do monthly newsletters of what's going on in NAREB Dallas. So members will get access to the monthly newsletters. There's opportunities to advertise in these monthly newsletters as well. Our first newsletter will be in the month of February. So we already putting together some content to share. So become a member so you can take advantage of the newsletter that we have that's going out on a monthly basis. So we want to be able to flood what we have going on to you guys. So we want to make sure you're not missing out on what we have in store for this year. Do we have any questions? I know we have a midwinter coming up for March 1st through the 4th. It's going to be in San Antonio. I know there may be some people driving to San Antonio for the meeting as well. I more than likely will be driving, but March 1st through the 4th, please make sure that you are getting connected on the national level, taking advantage of that, because that's when you really see that. And with the shirts, we'll be able to wear those down in San Antonio. So how awesome is that as well? So again, take advantage of this San Antonio opportunity. It's in our background. It used to be in Vegas. We used to have to travel, but because it's so local, I feel like we can get a lot more of Texas, Dallas-Fort Worth. We can show up a lot more in numbers heading into the midwinter. So I'm excited. March 1st through the 4th. Do we have any other quick announcements for anyone that's here on the call?
Yeah, can I say something?
Yeah.
All right, J. Rashad Thomas, and just to piggyback off President Lewis, please understand right now, DFW is one of the hottest places to relocate. If you are not tapping into the NAREB system as far as getting relocations, then you're missing out on a ton of business. DFW is getting about 1,000 families moving here a week. They have no place to go, and they need people to refer to realtors. So go to San Antonio, meet some people from Houston, San Antonio. Houston is giving a ton of referrals. So if you needed another reinforcement of why you should get locked into the NAREB network, then your pocketbook will reflect if you tap into the NAREB system. So
yeah, so that's very important. I had steak dinner with a realtor in California. A few months later, she sent me a $600,000 client to work with. I was relocating from LA down to Dallas. So keep that in mind. Membership has its privileges. Connecting and networking has its privileges. And when you at these meetings, don't just be a fly on the wall. Connect with people, build relationships, pass out cards, and really, focus on how you can partner together to build an empire, because there's many ways to get paid in real estate.
Stephen, I do want to say this too. I do have I have a young man that's a football player in Florida, and he is looking for investment property. So this is so great about this organization. I can find a member down there to work with him and do investment property. So what we have seen today is a good opportunity for you to join this organization and do it now, because it will help you in the future and help us to make money. Thank you, Stephen. You're a great president. Keep on doing it.
Thank you. And I did not want to miss this opportunity, but for anyone that recently joined as a new member, not necessarily a renewed member, but as a new member, can you introduce yourself real quick?
Yes, I'm Camille White, and I'm not new to NAREB. I'm just new to your chapter. I was with the North chapter, and I said, well, I mean, I've known about you guys. I've attended a couple of your meetings, but I was speaking with Loretta Reed, and I was telling her I was thinking about joining, and she said, well, come on down. So I said, okay, I will. And I am signed up for the midwinter conference. I've already, paid my dues and what have you for that. But I am glad to be with you guys. I really enjoyed the meeting today, and I was impressed that the log on and everything was just out there for anybody to attend. I thought that was great, and I'm gonna, see if I can't tell some more people about you. And you did a great job, President Lewis. Thank you. Oh, I'm sorry. I am with EXP. I'm like so excited to be with I was just doing all that talking. But yes, I am a realtor with EXP Realty, and I've been with them for about maybe 4 years. I was with KW before that, and I'm just excited to be with them. I love my brokerage, and I'm happy to do networking and what have you with you guys. Thank you.
Thank you, Camille. We appreciate it very much. Do we have anyone else? Recent member, recent to the chapter?
Oh, hi, I'm not a member. My name is Echinacea Stevens. Obviously, I'm a loan officer with Lender Express Mortgage. I was invited to join the group, check out today's Zoom meeting by Rashad Thomas. So thank you so much for having me. It's a pleasure to be here. So much great information. And I'm gonna look forward to getting some more information to possibly, joining. But yeah, it was some great information.
She gonna be a member, y'all. Don't worry
Yeah,
about it.
yeah. I know. I see it.
I'm sorry, I'm a little bit nervous with everyone.
Hey,
I've
we
been
got you.
observing a lot.
So we have a new member getting ready to join. So yes, let's give it up, guys. Let's give it up. Awesome. We will be happy to welcome you here. Is Monica? Are you on, Monica?
Yes, my name is Marnika McMillan. I am with,
yes.
No worries. I'm with Keller Williams, Frisco, just relocated here in April. I am from Memphis. I've been a realtor for 6 years, and I'm just looking to connect and be a part of this great community and learn.
New member, Monica, happy to have you join. So you see that, guys, we're rolling. So let's keep this thing going. So I want to give you back your time, be respectful. So thank you and welcome to the new guys, and welcome to the new, soon to be new, Nikisha. Oh, Vicky.
Hey, yes. Hey, Mr. President, I just had a question. I know we talked about it in our committee meeting, but are we doing like an open house in February or a live event? Is that something we want to share? Do we have a date yet?
No, well, we are working on doing a in-person in the month of April. So look out for that. Hopefully by that time we will be a little bit better shape to as an economy to
not the NAREB meeting. I'm talking about the mix or the networking event we talked about.
Oh yeah, we are working on the network mixer. Thank you for that. For February 17th. So look out for some literature on that one. Hopefully we should be getting that out in the next week. So look out for that. Thank you for that, Vicky. So February 17th, professional mixer for the organization. So look out for that information. But she did bring up something that made me bring up something, which we are working on getting back together. We want to be able to have 3 of these in person for the upcoming year. So starting with the month of April. So look out for that as well. I know I would be excited to see everyone face to face. So thank you for that. I'm going to go ahead and adjourn the meeting with a prayer. Brother Robert Lewis, would you mind? If there's not any other question, Robert Lewis, he will adjourn the prayer for us. I just want to say thank you for participating. Thank you for carrying it into 11 o'clock hour. So we thank you for that. It was a great meeting, and look out for more dynamic speakers and a lot of new creative opportunities to get connected and stay connected and work as one. So thank you.
All right. Dear Heavenly Father, thank you for the meeting. Thank you for all of the information that has passed. Don't let it sit stagnant. Allow all of us to be vessels, not only to gather the information for ourselves, but also to pass it out to those and get it to those in need or in want. Thank you for all those presented. Allow us all to go out and be prosperous and be and spread the good news and all the great information that we had today. Again, be with us with health, family, and finances. And all these things I ask in Jesus' name. Amen.
We have a lot of good realtors, good-looking realtors, including God's Father.
Amen, amen. And if everybody could, please make a post. I know a lot of people don't do social media, but please say something about the organization so we can get in the forefront as professionals about real estate. So, like I said, I'm not going to press y'all, but I will be looking, though.
Thank you. Appreciate you.
No pressure at all.
Have a great day. Thank you, sir.
Make it a great one, y'all.
Have a good one.
Bye-bye.
Bye.
Yeah. Huh.